but now that I think more about it, it makes sense why we pay taxes. Do the dental practices have something like up here with the company that we have, the government gives us some tax incentives that's like basically when we prove to them that we are doing something good and we are a startup, we're just starting out, they basically return all the taxes that we have paid plus something on top of it, like the amounts that we have paid for the employees. Are there such programs for basically startup dental practices as well?
There certainly are credits that are out there for like starting retirement plans or small business. Some of them might not be at the federal level, sometimes at the local level. Is it something that's like broadly across the industry? Not always, because a lot of times dentists have their income is at a level that is beyond what those programs will support, even in a startup situation, because that doctor is still often maintaining an associate position and maintaining a relatively, or what the government considers a high level of income. So you wouldn't qualify for certain things. That being said, the big thing that a startup business is going to get a tax benefit from is just the fact of buying equipment and investing in business assets. You can depreciate them. So depreciation is a deduction that you get for the value of that equipment. And so there are laws like Section 179, which you mentioned for the car, but it allows you that even if that equipment is financed, you can deduct that full cost up front. This could get me, I could talk about this for hours, so I'm going to try to trim it down. But when I look at a startup practice, though, sometimes I don't want to deduct all that stuff up front because we want to better match it to the cash outlay. Just again, when we're looking at the forest and not just a tree, the tax tree in our forest, because you're going to be paying off that loan for most cases 10 years. So if we deduct all of the principal of that loan, which are the business assets you bought with it in year one, you are still paying off that loan in year 5, 6, 7, 8, 9, 10. And a lot of times clients in those years, they come to me and say, Angelisa, you're telling me I need all this money and my taxable income is this and I don't feel it. And where is it? It's the principal that you're paying on your loan that you deducted years ago. So I usually, with my startup practice, there are a lot of times actually where I'll opt out of that aggressive depreciation. I'll take enough that you're not going to report any taxable income. But I may spread it out because you might not need it so much in that early year, but you certainly could in that first year.